In today's video, we will discuss step by step the strategy followed by the great Larry Williams to turn $10,000 into $1,100,000 in just 12 months. Yes, you heard right, 11,300% in just 1 year, which gave him the victory of the World Trading Championship. But this is not all, because 10 years later his daughter managed to win the same World Championship again. It is clear that it was no coincidence. Welcome to the trader's game. And before we start, remember that in the description you have the links to join us in our Telegram community, where every day we post charts and analysis of what is happening in the financial markets. And also the trading bonus page, which has been updated and have added new promotions and free bonuses for all those who are starting in the world of trading. Do not forget to leave your email if you want to receive a weekly newsletter with everything that has happened during those days. First, we go to the indicators part and look for the Donchian channels. It is an indicator that already provides us with TradingView, and when we click on it, we will see something like this, very similar to the Bollinger Bands, but with much more information and possible utilities. We go directly to configuration. In the part of style, we put it to our taste to improve a little bit the visibility, and in length we are going to place 96, and we give to accept. Now you may wonder why 96 exactly. Originally this strategy was used in 5 minutes time frame and especially in Forex and traditional markets, since that length of 96 meant that multiplying the 5 minutes time frame by that length of 96 would give us a result of 480, which between 60 minutes each hour would give us about 8 hours. As I say, this measure was perfect for the world of Forex and stocks, where you can use it in that way and in that temporality in the same way that we will see below. But we have given a twist to all this, and wanting to adapt it to all types of assets, including cryptocurrencies, we have adapted this strategy to temporality of 15 minutes in more volatile assets. That is, if you trade Forex or stocks, you will trade that length of 96 in 5 minutes, and if on the other hand you like more volatile assets such as cryptocurrencies, we will trade that length 96 in 15 minutes. Well, the first thing that we detect just with the Donchian channels is that, at the moment when there is a candlestick close below or above the middle orange line, the trend of the movement ends up being pronounced, obviously according to its direction. For example, we see that at this moment the trend changes from bullish to bearish, and what happens just when we have a negative red candle, which closes below that middle orange line, is that at that moment that downtrend that had started is pronounced. In fact, on this particular occasion, we could even look for an operation with stop loss at the previous highs and a take profit with a 1.5 ratio, which is normal in this type of assets, or even being a little more conservative looking for the bottom of where it showed us a possible support area at the beginning of that break, that is to say where the Donchian channel has marked us, the bottom, at the time of our entry. On the next change in trend, the next day, we can see how the center zone acts as resistance and an accumulation zone for the next move. If we get closer, we can see that no candlestick closes above that center line until this one here, at which point the trend is pronounced and we could take our trade. It is important that this type of operations with stop loss so wide, we do them in areas where the Donchian channel is wide, and that we do not do them in areas of lateralization as it could be this one. Again, the trend changes again, we have that candle close, in this case negative, and we look for another operation again. We would take profits down here, and we would practically take the whole movement, since then the price starts to lateralize. Personally, I would not try to make such long trades. It is a strategy, a system, to which we will now add 2 other indicators, but even so I would always look for a shorter stop loss, not so much in the upper area of the channel, but in the highs of the previous structure, that is to say, for example, this area here. Then of course our 1.5 ratio operation would be more or less around here, and as you can see, I would also respect what I told you before, that many times it is better to directly collect and put that take profit in the support zone that marks the lower channel line. To improve the effectiveness in our entries, we are going to add another very basic indicator. We are talking about the volume. The one that TradingView already provides us is perfectly valid, and in its configuration we will change the length to 30. In the style part we will activate the volume average. We place it, for example, in white so that visually it is more pleasant. And how does the volume help us in these occasions? Well, very simple. We know that this would be our entry because this negative candle closes crossing the center line. It is our first confirmation, but the second is that the volume gives us a large candle above its normal average of the same color as the one that has the price, i.e. we are looking for a short, red candle, and below also shows us that we have a high total volume and also closes its own candle in negative. That tells us that the entry is good, and as you can see, it is so. Another detail that volume has is that it can help us to detect the stop zones. Basically, when there is a big trend at some point, it will have to stop or start to lateralize to change that trend later. As you can see, we have this candle here and this candle here, where the price wants to start bouncing and these small pullbacks occur, and what they both have in common is that the volume increases at that time, just in those candles, and that produces a subsequent rise. In fact, being in temporality of 15 minutes, we could even take advantage of the closing of those candles to make some small operations. Even also looking for this time the 1-to-1 ratio to ensure more our operations, since we are not having that second confirmation. Obviously, the more basic knowledge we add by placing supports and resistances, the more information we will have about these stop zones. As you can see, we have many examples where we can apply both rules, closing red candle crossing that central zone, with negative volume above the average, stop loss above the previous highs, and take profit at the bottom of the channel or with ratio 1.5. A few minutes later, we have the same situation, but on the contrary, green candle closing, crossing the middle zone, with positive volume above the average, stop loss below the lows of the structure, and take profit with ratio 1.5. Here the price continues to lateralize, and as you can see, it comes back in positive. In fact, even this movement here again is very clear, and we would take it again perfectly. Even so, as personal advice, when this type of strategy takes quite a long time to reach the take profit, and you see that the channels are compressing, which indicates a possible lateralization or consolidation in that area, it is advisable to take profits, collect already, in the upper zone of the Donchian channel when it has been compressed. I think you understand quite well what I mean, because it is very important that you keep in mind that in assets as volatile as, for example, cryptocurrencies, trends can change quickly, and that also includes these large lateralizations, and thus we avoid possible problems, although equally on this occasion we would have touched our original take profit. Another very basic indicator that we can add is the RSI. I recommend you to use this one from Crypto Insider because it colors more clearly those oversold and overbought areas. The RSI in conjunction with this strategy goes very well because it gives us an extra confirmation of the moment in which we are and if we should make some entries or not. For example, here it marks us that we are in an oversold area where there is more likely that the trend is reversed. We then wait for a positive candle to cross that center. We look again at the volume if it exceeds the average, and we take our operation with the assurance that we are buying in a correct area and not in an area already overbought. The same thing a few minutes later. We touch in that overbought area, so the trend tends to reverse. We have that candle that crosses the center down and that necessary volume. Again, another operation nailed. Even those two areas where before we saw that we had that stop volume are very good to make operations with several entries. That is to say that we do not have a fixed stop loss. And if, for example, we made that first entry there, and then seeing that the price continues to fall, but in turn is forming a divergence, and in both candles we have that necessary volume, we could also make another purchase here. Putting the average of both would be more or less around there. We look for a sale at the top of the channel, and again a 1.2% that we have taken in a few minutes, and that without leverage. As you can see, it is a very, very simple strategy, but in turn also systematic. That means we need to be always attentive and disciplined to do it to the letter. If we get it, we will improve our win rate to levels above 92%, which led Larry Williams and his daughter to win those 2 World Trading Championships. As always, tell me below in comments what you think and if you are already trying it. If you like our work, support us with a good like, which is completely free and helps us a lot. And of course, do not forget that in the description you have the link to our free Telegram community, where every day we share information and analysis of financial markets. And you also have the official page of Trading Bonus, where all those who are looking for the best platforms to start in the world of trading can get the best free bonuses. Thank you very much for watching us one more day, and see you in the next video of the Trader's Game.